everybody. So we were talking about how as a business owner, it's good to be the king, but it's lonely at the top. Well, no business owner wants to die at their desk, but we want to make sure that there's a succession plan available that makes sense. Let's say I've built a business, it's worth $10 million. I don't want to just give it away and use my lifetime gifting exemption, but I also don't want to burden an employee or a child or whoever I want taking care of it, having to use all the income that they earn to pay me for my company, which I then have to turn around and pay capital gains taxes on. In that situation, the only real winner is the tax man, right? Well, using Haas Financial, we can help design a much speedier, much more tax efficient way to transfer the company for value without resulting in tremendous debt or tremendous income or capital gains tax for both buyer and seller. So that the true winner in that situation is the seller for having sold a business and buyer for having taken over a business for which they don't have to essentially work in indentured servitude.
What Ethan is talking about is Section 453 that it's been around forever. And yet we see business owners where they had already sold the business and they have to pay a lot of taxes, which is substantial. In California, we're looking at almost between state, federal, and the Medicare tax. It's almost 37.5%, 38%. So if you had capital gains of $10 million of business growth that had no basis, you started out of the garage, you're going to write a check for $3.75 million the following year. And of course, one of the simple ways would be to make sure that the money comes from the escrow to the trust that we can create for you through the attorneys we work with. Again, we're not attorneys, but we work with people that they specialize in this. And the money sits in the trust, and year to year, you have to take installments and pay the taxes on the installment that you agree on and pay the taxes as you go. What that does for you, though, it gives you the opportunity to work with $3.75 million more that me and Ethan will come in to do the investment management, and we use Charles Schwab and Fidelity and our RIA foundations to manage the money to make sure you have potential for growth and be able to pay the taxes in little chunks. So that is another area. And talk short about the charitable planning end of it.
And like we said, if you've got an income tax problem, charitable contributions and charitable tax planning are a wonderful way of using the tax code and the charity of your choice to increase your short-term or even long-term cash flow. You have tools such as a charitable lead trust, a charitable remainder trust, even a charitable remainder annuity trust. Those are all tools that are specifically designed to mitigate your taxes, both income and capital gains. These tools can all be used to offset up to 50% of your taxable earnings. And again, if you have deductions above that 50% number, you can carry those forward for up to 5 years.
Right. So if you have interest in planning on this end, you're going to sell your business within the next 2-3 years, you should be starting to plan now. And we could help you coordinate that, or if you have securities that have gone up in value, and maybe even real estate, if you have purchased apartment buildings or whatever form of real estate that you have rented out, you could use Section 452 to defer the taxes. So if you have interest, click on the link below and we'll be right there at your disposal to help you any ways we can. Thank you.